Starting another webinar, roughly 2:10 p.m. Eastern. Sorry for the delay. I suck at technology, and I'm overwhelmed with plays. US is spiking. I missed it. TLSS is the one that I nailed for roughly $5,000 in profits. Nice little 2-day spike. I missed the big run up though from all the way up to 9.5 today. I hope some of you guys got that, but I got a little of the. Well, not even a little. I got a good chunk of the move. I got like half of the move. But then CREX tried to dip buy. Didn't really work, so I got out. It just cracked. Congrats to shorts. Biggest winner was on CAPR. Literally, it spiked 2s to the 7s on positive coronavirus news with its new drug. But it also dropped from 7 to the 3s, which offered a dip buy opportunity. And then 3s all the way to 11. And I had a good buy alert on my Supernova Alerts newsletter, which goes for, exponential parabolic type moves like that. It's a little different. I'm getting a lot of questions. But Supernova Alerts is really only like one alert per week. It's different than trading in and out. I've been on fire 5 weeks in a row, but it's not always going to be that perfect. I missed the big UAVS spike today, but I'm so proud of so many of you guys. I'm really just not even overwhelmed with trades myself. I'm overwhelmed with students nailing CAPR, UAVS, TLSF, CREX, 4 solid plays, and CYDY, the short 2, 5 solid plays today. So props to all of you. How are you guys doing? How much are you guys up or down today? I'm just curious. I'm getting a lot of messages, but I can't really keep track. Let's see. Clay Ruff has made $2,000 today. Triggerman made $540. Corolla Crawford made $539. Manny made $744. Trish Jace made 10%. Rami made $450. Bao made $4,000 on all accounts. Good job, Bao. D Edwards up 2,300. Tom A up 500. Patrick 500. Cardiac Nurse 400. Thank you for your good work too. If you're a nurse, I know it's a tough time right now. Al was on, says I am fine. Tim up 1,300 today and missed a lot of moves. We're all missing moves, but the key is learning from it and taking what you can. And if you can make 1,300 still and still miss a lot of moves, that's
down in the house.
And even if you're missing all plays, that's too. Seeing this stuff, recognizing it. It could be worse. You could be a short seller. So many people who hate on me claim that I lost
300 this week
with my buy alert at 510, and the thing went to.
You got to follow your rules.
Can you just imagine how angry you
got to be disciplined.
It didn't go from 5 to 11 right away.
Which stock did you buy?
Over 3 hours. It's now in the 9s. I would not be chasing it down. But also CAPR, it's traded 170 million shares today at an average price of $10 a share. Roughly 1.6 billion worth of stock has traded hands. So I think I get a little too much credit for that pump. I don't control $1.5 billion. Let's see. JM Lucci made 1,135. Vago up 7,900. Good job, Vago. GJ Bailey is up 10% on UAVS. Sebastian is up $3. Good job, good start. Miguel's up 49. And don't feel bad if you're up a little bit. Like Tim Grittani, even though he's closing in on 11 million in profits, once upon a time he used to make $20, $30, $40 on trades. If you go back and look at early Tim Grittani trades, he'll say like trading implosion, and he lost like $12 on a trade. So don't worry about starting small. It's better to start small.
Yeah, we coming in hot Monday.
D22 nailed.
I don't know. This was a great week for me.
On UAVS, missed CAPR.
What stock did you buy?
1 out of 2 isn't bad. I'm 1 for 3. I'm just glad that I nailed a little bit of TLSS, and I didn't even nail the whole thing.
Yeah.
Skinner has made 400. Legal Pimp is up 2,700 today. Good job. Don Boss 1,700 on CAPR UAVS. So Don Boss made 1,700 on the 2 plays that I missed. Boeing made 35 grand. Good job. Buy at 9 made 689.
I won't be doing a lot of trading next week.
So many big winners, big and small, it all counts. I agree.
Probably trade in the pre-market. That's it.
On VISL and UAVS. Being Mick made 388.
Gonna be very busy next week.
WMISC made 18,900, but risked a lot to do it. Well, at least you recognize that, you know, to make the 10, 15, 20,000 a day, sometimes you have to risk a little more. Today is the day to risk more. When there's so many supernovas, that's when you can get a little more aggressive. It doesn't happen every day. But CREX yesterday was fantastic. Tony Tex says
VVR did good today if you were patient.
Unfortunately, my order didn't go through. Only ended up making 120. Well, at least you still made money and you learned. Criminator says, Tim, I have a guest with me from Israel. He keeps asking me about
Neville in the building.
Stuff. Tell him to join the challenge. It's not enough just to know general market stuff. You got to get into the details.
No juice today. Water.
B. Nuapani says, watching you now, trying to grasp.
I'm drinking water today.
Yeah,
Never.
That's fine too. Suzanne is under the PDT rule, couldn't play, so watching trading tickers. That's a good guide to check.
No beer today.
To study. STJ says, I'm so happy to be in Lifetime Challenge. Please don't retire.
VVPR closed up 61%.
You guys are with me for life. I'm getting healthier by the day. So I expect to live a long life. Let's see. Bunta says was trading
VVPR is good for day traders. It has a lot of volatility, up and down.
The process.
It went as high as 24, 23 today.
Trade was good.
24 to
You have to
33.
give it a little room for slippage, though. You know, it was moving fast, so really got to, be careful. And then also, making $5 grand, I was happy with TLSS, but you can't go too big. I mean, it's traded 98 million shares today, but you can't just easily buy, 1 million or 2 million shares. STJ made 450 today, waiting on CAPR to squeeze, made 1,200. Be very careful with CAPR. Saying waiting for it to squeeze after it's already squeezed from the 3s to the 11s. It's back down to the 8s, just had a crack. I'd be very careful. I'd be locking in profits if it were me. Let's see. Green King made 600.
Keep us talking OPTT next week.
LSS, good job. Imad missed all the good plays, still up to 55 from experimental.
Dan, that's how it is sometimes. Sometimes you're busy. And you won't be able to trade. That's the way it is.
Watching, learning. Good. Do you mind asking the room how much people lost today? Don't feel bad if you lost. How many people lost today?
Don't worry, VVPR is not done.
90% of traders lose. So this is an extraordinary day where, you have CAPR supernova, UAVS supernova, TLSS, mini supernova.
VVPR has been getting a lot of deals.
Cracking from
They've been inking a lot of deals, VVPR.
I don't know why I said this year, but earlier strength, those are 2 good shorts. So 3 good longs and 2 good shorts. That's a busy day. OPK just spiked. Yeah, I saw that they got a deal for testing.
LMPX is up 23%.
It's only spiking like 7%.
Yeah, as soon as I sold it.
Is one of those curse stocks that should spike more, but it's kind of sketchy that it doesn't. Chase made 540. And Real Deal made $20.
Yeah, VVPR. I've been watching that stock from $4. That's
made 15K on CAPR. Good
it has a propensity to really spike. VVPR, a lot of movements.
Journey says CAPR stock was in the highs, had an ask of 508.
I've been making money in and out of that stock from $4.
It was never, it's very liquid. Doc Bryan, OPK, testing high of the day. Thank you so much for the alert in your training. Good. I'm glad that I can, help you see. Sean Briar just cashed out a CAPR $337 profit. Awesome. Maha Chris says, I'm hoping to start using Trade Zero. I wouldn't use Trade Zero. I wouldn't use any offshore brokers.
Please like the live.
Interactive brokers, not because they're the best, but because they suck the least. When you have an offshore broker, there's so much risk. I don't even know if you're, ready for that risk. You're probably not, because you don't even realize that you're taking risks when you go offshore. Anna Yavi
So in the
says,
after hours, we have PSHG. PSHG, they're up 87%.
Freaking keep up.
At 109.
Let's see. MJ
might be the one to watch on Monday.
Joined in March, never traded before, learning the basics. Any suggestions on what to study next? Penny stocking part 2, how to make millions, the complete penny stock course. DJ LA, if I remember correctly, you stay away from financing plays. Yeah, and that's another thing. UAVS will probably offer a financing shortly, so I would not be chasing it up 126%. Let's see. Boots lost $24 yesterday. Omer lost $19. Mel Soap lost $21, and that's fine. You know, these are part of your education. Steven says TLSS crash way too fast, lost $35, and that's okay. Now you learn how fast these stocks move, and if you can learn that lesson and lose, $10, $15, $20, $30, that's fine. Mike Brown says, Tim, with E-Trade, can you trade sub-dollar stocks? Yes, I do. I don't like sub-penny stocks, but sub-dollar stocks like TLSS is fine. Clowy 01, only small gain of $55, but pumped to what I find CAPR on your own. Awesome. It's not just about money. It's self-sufficiency. Remember, all my top students might be millionaires, but they're also literally self-sufficient. Let's see. Mel Stevenson made 430 on MVIS. I saw MVIS spiking too. I didn't even have time to really look. MVIS spiked a little. NEON also was a spiker I saw. Too many. Moonshot lost 300 because of your stupid NXTD trade. That happens. I try to stay away from NXTD. Let's see. Huron lost 2,500, thought of quitting, but will restart again. Good. And that's okay. Remember, Tim Grattani blew up his first $1,500 account. That's how he found me, because he didn't want to blow up anymore. Then he learned some good rules. A. Peters, good day, up 1,200 on UAVS breakout and ICD bounce play. Good. Is Chase a part of my team? Yes, Chase is a part of my team. Email admin@timothysykes.com. I apologize if someone's not getting back to you immediately. We're all overwhelmed. There's more plays, more students, more business than ever, because people are finally realizing that these penny stocks actually are somewhat predictable. It's crazy. What am I watching into the close? Same stocks as earlier. UAVS, but I don't want to chase it. CAPR, I don't want to chase it. TLSS, I'm just shocked that it even came back from the 4s all the way to the 9s, but now back down to the 6s. I don't want to chase it. I'm also watching CREX, which is fading, but they could come out with another press release. I wouldn't be too confident in any short. It's cracking and fading, but it's moving very slowly.
BDR.
I'm not, to be honest, I'm not like, I need to trade anything right now.
Let me write that one down. I got to research that.
I'm tired on the deck, gonna lie. Looking forward to a nap in a little bit. And I made roughly $5,000 on the day. If you can make $5,000 in the day, you don't have to be aggressive.
Island Gal in the building. Island Gal, big up.
Made 431. Karen is most likely going to lose 300 today when I finally overcome some stupid shorts. Be very careful with shorting, guys. Okay, I know these fundamentals of these companies are bad. I know that you think they're going to go to zero. They probably will go to zero in the long run, but that's why CAPR spikes so much. Not because it's so it's amazing that 100% of their patients recovered, but the news was out and it went down to the 3s. Okay, it only got up to the 11s because of a short squeeze. So many shorts, I can't even begin to tell you, were doubting it in the 6s, 7s, 8s, 9s. Even when I put out the
live,
5, they were freaking out. They're like, "How could you do that?"
I appreciate you.
Already up over 100%, and I was like, "Well, I think it can go up more." Sure enough, it doubled. Let's see. GL Silva made 10 cents on CAPR. I feel scared to hold it. That's okay.
CBAC keep eluding me. I don't know.
Fast. Like I say,
CBAC. I gotta check it. Let me write that one down.
You get more confidence on certain patterns, and that takes time. Curtis, paper trading on stocks to trade made 420 on CAPR. Good. Always be closing says pretty epic. You have another $100,000 student. Yeah. Mark M. Fantastic.
Workhorse is hot again.
Over the $100,000.
I was supposed to buy an option.
So congrats to him.
I forgot. It's just too much.
Steph, first entry on UAVS was at 106.
Too much runners right now.
55 on the day.
I can't catch everything.
That's okay. You guys, like, everybody wants to capture all the money right away, but you need to get the confidence. You get the confidence by witnessing this stuff. So even if you don't make a lot today, at least you grew your knowledge account. You have two accounts, remember. You have your monetary account and your knowledge account. You need to grow your knowledge account enough at first so that it spills over to your monetary account. And I know that's frustrating. I know you want the money right away, but be grateful if you don't get the money right away. Be grateful if it comes in like year 1, year 2. That way, you know, you respect the ups and the downs more. Too many people make money too quickly. Sometimes they start in a hot market or they get lucky, and they don't respect money. And it comes so easily, and then it goes so easily too. Let's see. It's pronounced Amish, like the people in Samaru.
Hold on, let me see what's going on with BDR. Oh, they closed up 10% today. Yeah, they made a strong close. BDR. Let me see if there's any news. No news, no news. At least not on Yahoo Finance. Let me check Webull. Sometimes Webull have news and Yahoo doesn't. Let's see. BDR. No news. Let me check Twitter. What happened to GameStop? I thought GameStop was gonna pop big today because of that Microsoft deal. I don't have enough patience with the game GME. Soon as I sell, it pops. I don't see anything on BDR, no news. Let me check the charts real quick. We're talking about BDR. Okay, the 5-day chart setting up nicely. It's been flat all year. Yeah, they're due for a spike. Let me look into FinViz. Let me check the chart on FinViz. BDR. Oh, it spiked in August. Spiked from 80 cents to over 220. The 52-week high is 380. BDR, I'm going to keep a stock on that one for next week. Herg the Great. What's going on, Herg? Who we got? Fernie. Welcome. What are we watching for next week? I'm watching Workhorse, PSHG, and LMPX. A lot of runners this week. A lot of runners. It was a great week.
Simon & Schuster Audio presents Learn to Earn, a beginner's guide to the basics of investing and business. By Peter Lynch and John Rothschild. Read by Peter Lynch.
American schools have forgotten to teach our children one of the most important courses of all, investing. This is a glaring omission. History we teach, not the part about the great march of capitalism and the role that companies have played in improving our lives. Math we teach, but not the part about how simple arithmetic could help us figure out whether or not the company will succeed or fail and how we might profit from owning shares of its stock. Home economics we teach, how to sew,
Good
how to
for
cook
you.
turkey, even
Yeah,
how
I
to
doubled my money
and balance a checkbook.
in the pre-market a couple of
What's
days
left
ago.
out is
OEG.
how saving money from an early age is the key
But
to future prosperity.
Come 9:30, it was
Investing that money in
dead.
stocks is the best move
It
a
was
person
done.
can make next to owning a house. And how the earlier
Good
you
for
start
you,
saving
Erg.
and investing in stocks, the better you'll do in the long run. Investing is fun. It's interesting. Learning about it can be an enriching experience in more ways than one. It can put you on the road to prosperity for the rest of your life.
If you want to take advantage of
The
4
millions of
a.m. trading,
Americans who have discovered the fun and profit in owning stocks aren't all whiz-bangs who drive
get a
Rolls
Webull
Royces,
account. Sign up with
like the
my
people you see
Webull link.
on lifestyles of the rich and famous. Most of these shareholders are regular folks with regular jobs.
A lot of action,
Teachers,
4
bus
a.m.
drivers,
Webull.
doctors, carpenters, students, your friends and relatives, the neighbors in the next apartment, or down the block. In our society, it's the men who've handled most of the finances. And the
Okay,
women
great.
who stood by and watched men botching it up. There's nothing about investing.
And
that
they
a
get
woman
the
can
news
do as well as
early.
a man. You don't get the
Sometimes
natural
I check
the
Yahoo
genes.
Finance and no news.
So when you hear someone say, he's a natural-born investor, don't believe it. The natural-born
Bobby
investor
Vincent
is a
in the
myth.
building.
The principles of finance are simple and easily grasped. Principle number one is that savings equals investment. Money that you keep in a piggy bank or cookie jar doesn't count as an investment. Anytime
Fernie, you
put
missed
money
out
in
on
the bank,
age.
or buy a savings bond, or buy stock in a company, you're investing. Somebody else
Age
will
was
take that
flying
money
like a
and
bat
use it
out
to
of
build
hell.
Stores, new factories, all of which create jobs. More jobs means more paychecks for more workers. If those workers can manage to set aside some of their earnings to save and invest, the whole process begins
I had
all
a
over
subscriber
again.
said that's the highest
The best time
gainer
to get
he ever
started
had.
investing is when you're young.
Age.
The more time you have to let your investments grow, the bigger the fortune you'll end up with. But this introduction to finance is not only for young people. It's for beginning investors of all ages who find stocks confusing
Yeah,
and
that's Peter
who
Lynch.
haven't had the chance to learn about them. Before we go any
BM, what's
further,
BM?
I want to stress again the importance of saving on a regular basis and starting young. Whether it's $50, $100,
No,
$500
Dan, I
a
haven't
month.
heard of BM before.
Consider the following two
Let
cases.
me write that down.
Joe Big Belly and Sally Cartwheel. Big Belly gets a job as a clerk at Walmart. He's living at home and saving every last dollar so he can make the $2,000 down payment on a $20,000 Camaro.
Dan, tell me
with a
something
Reese's
about
scoop on the
BM.
hood. He takes out a car loan for the remaining $18,000. His parents have to sign for the loan, but Big Belly is making the payments. It's a 6-year loan at 10% interest, so he sends $200 a month to the finance company. He cringes the first time he seals the envelope. kissing $200 goodbye. But he forgets
Bobby, I
all
heard
about
about
it
that.
when he's driving around the Camaro.
I
his
heard
friends are
about
telling him
Robinhood
what a
being
cool
hacked.
car it is. A few months later, there's scratches on the door and stains on the carpet.
They better not mess with my
Nobody is
money.
oohing and awing when the Camaro pulls into the parking
I'm
lot.
trading options
Just
only on
another car right
Robinhood.
now.
Options
The big
only.
belly
I'm
is stuck with
practicing
the payments.
options.
At the end of 6 years, he's sick of the Camaro, which lost its cool a long time ago. He's finally paid off the car loan, which cost him an extra $10,800 in interest charges. So between the loan and the original purchase price, Big Belly has invested $30,800 in this car, not including taxes, insurance, gas, oil, and maintenance.
Bobby, I got to look into
More
that.
dense and more
Because
stains.
now I'm worried. This is the second time I heard
A bit rough. So what
about
he's
this
got to show for
Robinhood.
his $30,000 $800 investment is a $6,000 clunker that he doesn't even like anymore. Sally Cartwheel also lives at home and works the Walmart checkout line a few feet away from Big Belly. She didn't buy a cool car. She took the $2,000 she saved up and bought a used Ford Escort. Since Sally paid all cash, she didn't have car payments. So instead of sending $200 a month to the finance company, she invested $200 a month in a mutual fund for stocks. 6 years later, when Big Belly was mailing out his last car payment,
Yeah, it was all over
the value
Twitter.
of Cartwheel's mutual fund had doubled. Between the doubling of the fund itself and the
No, it was
steady
in
stream of $200
a
contributions to
Facebook
the
group.
fund,
I saw some
Cartwheel
guy said he
has a
lost,
$22,000
he's
asset.
missing some money from Robinhood.
She
or
also
something.
has the Escort, which got her back and forth okay, and the dents and the stains she never worried about because she didn't
That's
think
not
of
a
her
good
car
look.
as an investment. It was only transportation. As we leave this economic morality tale, Cartwheel has enough money to make a down payment on an apartment and move out of her parents' home, while Big Belly continues to mooch. He's asked her out on a date, but she's taken a fancy to the real estate agent.
But I think Robinhood has insurance. I think if you lose money from a hacker, Robinhood will replace it.
People
I
of
think.
all income levels
Don't
put
quote
aside
me.
as much money as they could, mostly in savings accounts at the local bank. They made money on this money as it grew with interest, so eventually they could use it for a down payment on a house or to buy things.
No customer
or to
service for
borrow
Robinhood.
in family emergencies.
You got to go through
In
email.
the meantime, the bank could take people's savings and lend them out to home buyers or home builders or businesses of all kinds. A country with a high savings rate can pay for roads, phone lines, factories, equipment,
Pardon me,
and
I'm
all the
eating
latest
while
innovations
talking.
that help
I hope
companies
I
make
don't
better
choke.
and cheaper products to sell to the world. An example is Japan. Japan was near ruined by World War II, but it managed to bounce back and become a great economic power.
Bobby, Fidelity
Japan
charges
was
any
able to
commission?
revamp its industries and rebuild its cities and towns because of its high savings rates.
Any commission
Still
with
a nation of
Fidelity?
savers today. The U.S. has a lot of catching up to do in this area because we no longer save the way we once did. While we put
Okay,
aside
good.
5% of our income every year, the people of Japan,
Yeah, I heard
Thailand,
Thinkorswim
Hong
is
Kong,
always
Singapore, China,
freezing up.
and many other countries are saving 10% or more.
Robinhood been having some
We lead
issues
the world
this
in
year.
credit cards and in borrowing money to pay for things we want right away but can't quite afford. Save as much as you can. Start when you're young. You'll be helping yourself and helping the country.
They gave me back some money.
The
They
stock
were
market
down the
offers
whole
each of
day.
us a terrific way
Was
to
it in
both
March
of
or
those
April?
things. Save and invest in the country. But to win at this game,
They were down
have
for
to
the whole
understand
day.
how
You
it's
couldn't
played.
trade.
let's begin with the basics.
I think it was March 1st because they didn't factor in the leap year. Robinhood, they didn't factor in the
The
leap year.
vast majority of businesses in this
That's
country,
carelessness.
from barbershops to bowling alleys, are privately owned by individuals, families, or small groups of people. You can't invest in them. But the biggest companies in America are almost all publicly owned. That means anybody can call up a broker and buy a share. Even if the chairman of McDonald's holds a grudge against you, he can't stop you from becoming an owner of McDonald's. Same goes for over 13,000 other public companies in the U.S. today. Public companies are everywhere. They surround you from morning to night. You can't get away from them. Nike, Chrysler, The Gap, Sunglass Hut, Kodak, Walmart. These are all public companies. Maybe you eat the school
Is
lunch
Fidelity
that's cooked
offering
on a
any
banana
deals?
radar range made by Raytheon.
Because I'll open
That's
up an
the same
account with
public
them.
company that makes the Patriot missile.
I got to get something out
Or
of it.
maybe
Joe.
you drive to the nearest publicly owned hamburger joint, McDonald's,
Free
Wendy's,
stocks or
Burger
something.
King, which is a division of a British public company called Grand Metropolitan. Coke and Pepsi come from public companies. And Pepsi also owns Taco Bell. From sea to shining sea, over 50 million men, women, and children have become part owners in public companies. This is an important part of our way of life that the founding fathers couldn't have dreamed up.
Okay.
Investors are the first link in the
You get
capitalist
tier
chain
one
that
customer
creates
service,
our
just like
prosperity.
TD.
In fact, investors
TD
got this
Ameritrade.
country started.
My first account was
History books give many
TD
reasons
Waterhouse.
for
They were
America's
called
great
TD
success.
Waterhouse.
From the favorable climate,
Then they merged with
tenacity
Ameritrade
of the
and they
first
called
settlers.
themselves TD
but
Ameritrade.
behind the scenes, somebody had to pay the bills for the ships, the food, and the other expenses of coming to the New World. Most of this money came out of the pockets of the English, Dutch, and French
Yeah, that's the
investors.
thing with Robinhood. No
Without
customer
them,
service.
The colonies would never have gotten colonized. For example, it was the Virginia Company which footed the bill for the first expedition to Jamestown, where Pocahontas saved John Smith from having his head bashed in by her angry relatives.
There's no number to call.
And later, in the mid-1800s,
That's
it was again
scary.
foreign capital that helped bankroll our fantastic progress.
I'm
as
gonna
an
move
emerging
some of
market.
my funds from there.
Today, we are returning the favor.
No, I'm getting worried with
American
Robinhood.
capital helps the
They're
world
messing up too
economy to
much
grow,
now.
especially the emerging markets in Asia, Africa, and Latin America.
Just keep a small amount for
It did not take long for capitalism to take root in America.
options.
By the early 1700s, companies of many types were getting started in the colonies. A few are still operating today. This is an amazing feat when you think of all the calamities between then and now. J.E. Rhodes, for example, has been around since 1702, when it began manufacturing buggy whips. Clever managers saw the age of the machine coming and switched to making conveyor belts. The D. Landreth Seed Company has been around since 1784. It sold seeds to Thomas Jefferson.
Yeah, thinkers swim. I heard
It's a good
lags a
product
lot.
that never goes out of date. It can stay in business
That's
forever.
not good for the.
While there
for
were
day
businesses
trading.
in colonial America,
No good.
there were no banks. The British did not allow them. After the Revolution, this problem was corrected. In spite of the opposition from Thomas Jefferson, a gentleman farmer who dreaded banks, Alexander Hamilton got approval for the first bank of the United States in 1791. We all recognize George Washington as the father of our country, but Alexander Hamilton was the father of the financial system.
Yeah, they got to make some money somehow.
Hamilton's more famous for being a bad shot,
TOS. They have to
Losing a
make
duel to
some
Aaron
money
Burr.
somehow.
but he was an astute economic planner. Hamilton also helped found the Bank of New York, still listed on the New York Stock Exchange. But the earliest shareholders in American banks, knowing little about what they were buying, paid too much for many of their bank stocks. The bidding went higher and higher until it got to ridiculous prices. And on Wall Street, what goes up that high must come down. Bank stocks landed with a thud in the crash of 1792, the first crash in Wall Street history.
KNDI is the dangerous runner.
Went out of favor after another panic in 1819.
Oh, you have patience.
When a lot of businesses went bankrupt and people lost their life savings and jobs. President Andrew Jackson transferred the government's money to various state
Once
banks,
I'm losing, I'm out of the
states,
stock. I'm not
which
holding.
gave out charters, in time created a vast system of banks.
300
KNDI.
in
In 1820, over 10,000.
Let me write that one down. I might check that one out.
At the time of American
I know its
independence in England,
capability.
markets were opening all over the place. People were buying
KNDI.
and selling at a furious pace. To many people, the whole situation looked out of control. Never in history were the
No,
masses
this
of
one is
people
not one up on
allowed to
Wall
go their
Street.
own
This
way
one is
and
learn
their
to
own
earn.
There didn't seem to be any
Learn
rhyme
to
or reason
earn. One up on Wall Street is a
Enter the
very,
economists,
very good book.
a new breed of thinkers.
If you want to
The
learn
first and smartest
fundamentals,
was Adam Smith. His Wealth of Nations,
read One Up on
published in
Wall Street
1776,
by Peter
the
Lynch.
year
Check out my
America declared
playlist.
independence, made the case for economic freedom. Smith deserves a place in
Tons
history,
of knowledge.
along with Tom Paine, Benjamin Franklin, and John Locke, who made the case for political freedom. Smith argued that when each person pursues his own line of work, the population is far better off than with a king or central planner dictating who gets what. This seems obvious today, but in 1776, it was a novel idea that millions of people could do what they pleased and somehow still create an orderly society where everyone was fed and housed. What if 99 out of 100 wanted to make hats? This is where Smith's invisible hand comes to the rescue. There's no invisible hand, of course. That was how Smith explained the ability of supply and demand to keep goods and services in balance. Too many hats? Prices drop. Hat makers go out of business and switch to a line of work that's profitable, like vegetable farming. The invisible hand doesn't work perfectly, of course, but Smith's ideas still hold true today. When there's a need for a new product,
Bobby, thanks for checking in.
many companies go into the business.
Enjoy your weekend,
so
Bobby.
Computers that the price drops. The competition helps the consumer because every few months, fantastic new products come out to replace the clunky old ones. You don't need a king or a Congress or a Department of Things to decide what the country should make and how many. The market system that Smith described works this out automatically. And the profit motive supplies the incentive for people to work and corporations to be productive. Companies are in business for one basic reason. No matter if they're private or public, owned by a single shareholder or a million shareholders, the goal is the same. They want to make a profit. Profit is the money that's left over after all the bills are paid. It can be divided among the owners of any business, whether it's General Electric, Pepsi-Cola, Marvel Comics, or the car wash you run on weekends in your driveway. You wouldn't want to stand out in the hot sun with a bucket and soapy sponge if you didn't expect.
Yeah, that Robinhood thing is scary.
Maybe you enjoy washing cars because you can hose yourself down every once in a while. It keeps you cool in the summertime. But that doesn't mean you do it for free. The same is true of people who own shares in companies. They're not doing it just for the fun of getting invited to the annual meeting.
I have to check Fidelity to see if there's any incentive
They're doing it because they
to open an account.
In which they own
Something
shares
has to be in it for me.
Pass along some of that profit to them sooner or later. There's a mistaken idea still floating around that people who do things for profit are being greedy or underhanded. They're trying to pull a fast one on the rest of us. Because whenever one person makes a bundle, it's at the expense of everybody else. A generation ago, there were more believers in this idea than there are today. But it's still lurking in the backs of more than a few minds. That one man's gain is another man's pain was the basic doctrine of communism. It was also fashionable among socialists on college campuses and elsewhere, who never missed a chance to accuse capitalists of putting themselves first and everybody else last, of getting rich on the sore backs of the wage earners. Capitalism is not a zero-sum game. Except for a few crooks, the rich do not get that way by making other people poor. When the rich get richer, the poor get richer as well. If it were really true that the rich get richer at the expense of the poor, then since we're the richest country in the world, by now we surely
Dan, I heard about that.
The most desperate class of poor people.
I heard about that lagging.
Instead, we've done just the opposite.
That's no
Even
good.
Corporate layoffs, which are painful to the individual, are healthy in the larger scheme of things. Back in the 1980s, the top 500 corporations found they had to get leaner and more competitive to survive. 3 million workers were dropped from the payrolls. But without these changes, millions and millions more would have lost their jobs. The bloated payrolls would have destroyed these companies. Meanwhile, small firms were creating jobs. Over 2 million new businesses were started in the 1980s. If they employ an average of 10 people each, that creates 7 times the jobs lost in the well-publicized layoffs of the bigger corporations. And often, the small companies have become larger ones, employing not 10, but thousands of people. In spite of everything you might hear about layoffs or America losing its place in the world, remember that our economy has enormous strengths. We are the low-cost producers in forest products, paper, aluminum, and chemicals. Believe it or not, our railroads are so good at moving cargo that other countries are studying how we do it. Our auto firms have made a stunning comeback. We're number one in pharmaceuticals, farm equipment, commercial airplane production, telecommunications, music, television, movies. In software, workstations, laser printers, computer networks, and microprocessors, the U.S. is dominant. The Japanese and Europeans can't keep up with the brainstorms that are coming out of such firms as Intel, Hewlett-Packard, Microsoft, Apple, and Compaq Computer. Meanwhile, the supposedly slothful U.S. labor force has become the most productive in the world. Each industrial worker producing nearly $50,000 worth of goods, $10,000 more than the average Japanese. All this innovation and productivity has been led by a different kind of American hero. Not all the heroes are ball players and rock stars. The people who start new companies and turn around older ones are also heroes. There's Steve Jobs, who created Apple Computer, which started in a garage, and Bill Gates, who created Microsoft. There's Walt Disney, the founding hero of Disney, and Michael Eisner, who brought back the full-length animation movies that gave Disney such box office hits as The Lion King and Beauty and the Beast. There's Lee Iacocca, who saved the Chrysler Corporation, Jack Welch at General Electric, Robert Goizueta at Coca-Cola, David Maxwell, who revived Fannie Mae, the largest mortgage corporation in the United States, and Fred Smith, who started Federal Express. Smith started FedEx not because he wanted to be rich. He was already rich. He did it for the challenge. In teaching the post office a lesson in how to deliver mail, he created jobs and helped the country. When you decide to save your money by putting it in the stock market, you invest in these kinds of heroes and the companies they lead. But what does it mean exactly to become a stockholder?
Goldman Sachs offering me a loan.
Let's look at that question carefully.
No, thank you.
When you buy a stock, you become an owner of a company.
They want to get me in
with
trouble.
All the rights and privileges. Invest in McDonald's, and they make a fuss over you. They send you their reports, and they invite you to their annual meetings. They also pay you a bonus in the form of a dividend. If they have a really good year at their over 10,000 hamburger stands, they might raise the dividend. So you get even a bigger bonus. But even without the dividend, if McDonald's sells another zillion Big Macs and all goes well, the stock price will rise. You can sell your stock for more than you paid for it and make money that way. Of course, there are no guarantees that McDonald's will prosper and that you'll get a bonus or that the stock price will rise. If it falls to less than what you paid for it, McDonald's will not reimburse you. They haven't promised anything, and they're not obliged to pay you back. As an owner of the stock, you don't have a safety net. You must proceed at your own risk. Nonetheless, stocks are likely to be the best investment you'll ever make outside of a house. 10 to 11% a year is what you can expect for a total return from stocks on average over the very long term. When people consistently lose money in stocks, it's not the fault of the stocks. Stocks in general go up in value over time.
Amazon looking good.
Cases out of 100, when investors are chronic losers, it's because they don't have a plan. They buy at a high price, then they get impatient or they panic, and they sell at a lower price during one of those inevitable periods when stocks are taking a dive. Instead, you need a plan. It should be for the long term. Have you heard the old expression, time is money? It ought to be revised to, time makes money. It's a winning combination. Let time and money do the work while you sit back and await the results. People who need to pull their money out in 1 year, 2 years, or 5 years shouldn't invest in stocks in the first place. There's simply no telling what stock prices will do from 1 year to the next. The stock market has one of its corrections, and stocks lose money. The people who have to get their money out will be going home with a lot less than they put in. 20 years or longer is the right time frame. That's long enough for stocks to rebound from the nastiest corrections on record. And it's long enough for the profits to pile up. After 20 years at 11%, an investment of $10,000 is magically transformed into over $80,000. To get that 11%, you have to pledge your loyalty to stocks for better or for worse. This is a marriage we're talking about, a marriage between your money and your investments. You can be a genius in analyzing which companies to buy, but unless you have the patience and the courage to hold on to the shares, you're an odds-on favorite to become a mediocre investor. It's not brain power that separates good investors from bad, it's discipline. Stick with your stocks no matter what. Ignore all the smart advice that tells you to do otherwise, and act like a dumb mule. That was the advice given years ago by an ex-stockbroker, Fred Schwed, in his classic book, Where Are the Customer's Yachts? And it still applies today. People are always looking around for the secret formula for winning on Wall Street, when all along it's staring them in the face. Buy shares in solid companies with earning power and don't let go of them without a good reason. Stock price going down is not a good reason. It's easy enough to stand in front of a mirror and swear that you're a long-term investor who'll have no trouble staying true to your stocks. Ask any group of people how many are long-term investors, and you'll see a unanimous show of hands. These days, it's hard to find anybody who doesn't claim to be a long-term investor. But the real test comes when stocks take a dive. No one can predict exactly when a bear market will arrive, although there's no shortage of Wall Street types who claim to be skilled fortune tellers. But when one does arrive, and the prices of 9 out of 10 stocks drop in unison, many investors naturally get scared. It's at this point that large crowds of people suddenly become short-term investors, in spite of their claims about being long-term investors. They let their emotions get the better of them, and they forget all the reasons they bought stocks in the first place, to own shares in good companies. They go into a panic because stock prices are low. Instead of waiting for the prices to come back, they sell at these low prices. Nobody forces them to do this, but they volunteer to lose money. Without realizing it, they've fallen into the trap of trying to time the market. If you told them they were market timers, they'd deny it. But anybody who sells stocks because the market's up or is a market timer for sure. A market timer tries to predict the short-term zigs and zags in stock prices, hoping to get out with a quick profit. Few people can make money at this, and no one has come up with a foolproof method. In fact, if anybody had figured out how to consistently predict the market, his name or her name would already appear at the top of the list of the richest people in the world, ahead of Warren Buffett and Bill Gates. Try to time the market, and you invariably find yourself getting out of stocks at the moment they've hit bottom, are turning back up, and into stocks when they've gone up and are turning back down. People think this happens to them because they're unlucky. In fact, it happens to them because they're attempting the impossible. Nobody can outsmart the market. People also think it's dangerous to be investing in stocks during crashes and corrections, but it's only dangerous if they sell. They forget the other kind of danger, not being invested in stocks on those few magical days when prices take a flying leap. It's amazing how few key days can make or break your entire investment plan. Here's a typical example. During a prosperous 5-year stretch in the 1980s, stock prices gained 26.3% a year. Disciplined investors who stuck to a plan doubled their money and then some. Most of these gains occurred on 40 days out of the 1,276 days the stock market was open for business during those 5 years. If you were out of stocks in those 40 key days, attempting to avoid the next correction, your 26.3% annual gain was reduced to only 4.3%. A CD in a bank would return more than 4.3% and at no risk. So to get the most out of stocks, especially if you're young and time is on your side, your best bet is to invest money you can afford to set aside forever. Then leave that money in stocks through thick and thin. You'll suffer through the bad times, but if you don't sell any shares, you'll never take a real loss. By being fully invested, you'll get the full benefit of these magical and unpredictable stretches when stocks make most of their gains. At this point, we've come to two conclusions. 1, you should invest in stocks if at all possible. And 2, you should hold on to them no matter what. The next thing you have to decide is whether to pick your own stocks or let somebody else do it. A lot to be said for taking the easy way out. especially if you are bored by numbers and you couldn't care less what happens to Kodak's earnings or if Nike makes a better shoe than Reebok. That's why mutual funds were invented. Mutual funds are for people who want to own stocks but can't be bothered with the details. In a mutual fund, your only job is to send money, which gives you a certain number of shares in the fund. Your money is lumped together with a lot of other people's money. You never actually meet them, but you know they are out there. The whole pile is handed over to the expert who manages the fund. At least
a subscriber asked me today if I could trade for him, trade his account.
To figure out which stocks to buy.
I don't have a license. I don't want to get in trouble. I told him I can't do that.
Another advantage. Besides having a manager,
I do not have any fiduciary liability insurance.
As soon as you sign up with a fund, you automatically become an owner of the dozens,
I only do it for
of companies
close friends and family only.
Whether you invest $50 or $50 million, you still own
I can't manage money for people. I don't have the license.
Than owning only one stock, which, if you're a novice investor, might be all you can afford. A typical fund allows you to get started with as little as $50.
I don't want to end up like Bernie Madoff,
with a chance to buy more shares whenever extra cash comes into your possession. How much and how often you contribute is up to you. You can take the guesswork out of it by investing the same amount every month, 3 months, or 6 months. The interval isn't important as long as you keep up the routine. This is called dollar cost averaging. Can you see the wisdom in this sort of installment plan? Your worries about where the stock market is headed from one year to the next are over. In a correction or a bear market, the shares in your favorite fund will get cheaper. So you'll be buying more at low prices. And in a bull market, you'll be buying less at high prices. Over time, with consistent investment, the costs will even out and your profits will mount. As an added attraction, many funds pay a cash bonus in the form of a dividend. It comes your way on a regular basis, 4 times a year, twice a year, or even 12 times a year. You can spend this money on movie tickets to reward yourself for investing in the fund. Or you can do yourself a bigger favor by using the dividend to buy more shares. This is called the reinvestment option. And once you've chosen it, your dividends are reinvested automatically. The more shares you own, the more you stand to gain from the future success of the fund, which is why your money will grow faster if you throw the dividends into the pot. You can follow your fund's progress by looking it up in the newspaper, the same way you look up the stock price of Disney or Wendy's. The price of a share in a fund goes up and down every day, and it moves more or less in lockstep with the prices of all the stocks in the fund's portfolio. That's why you want to invest in funds with managers who have the knack for picking the right stocks. You're rooting for the managers because the better they do, the better you do. Saying goodbye to a fund is easy. You can take your money out at any time you want, either all of it or some of it, and the fund will send you a check immediately. But unless there's an emergency, you have a sudden need for quick cash, getting out of a fund should be the last thing in your mind. Your goal is to sell your shares for a much higher price than the price you paid to acquire them. And the longer you stick with the fund, the bigger your potential profit. Along with the chance to share in the gains from a fund, you're also paying a share of the expenses. Salaries, rent, printing, mailing, telephone bills, all the costs of running a fund. These and other expenses are paid out of the fund's assets, and they cost investors between 0.5% and 2% annually, depending on the fund. Funds with expenses less than 1% have a built-in advantage over funds with bigger tabs. In addition to taking the annual expenses out of the shareholders' assets, some funds charge an entry fee called a load. These days, the average load is 3 to 4%. That means whenever you invest in a fund with a load, you lose 3 to 4% of your money right off the bat. The longer you stay in a fund, the less important the load becomes. Annual expenses deserve more attention than the load because they are taken out of the fund every year. For all the funds that charge an entry fee, there are just as many funds that don't. These are the no loads. As it turns out, the no loads perform just as well on average as the funds with loads. This is one case where paying a cover charge doesn't necessarily get you into a classier joint. Classy joint or not, professional stock pickers do have an advantage over the millions of amateurs who do their own stock picking. It's a hobby for the amateurs, but for the pros, it's a full-time job. They go to business school to learn how to study companies and decipher financial reports. They've got libraries, high-performance computers, and a research department to back them up. If there's important news out of a company, they hear it right away. It would take a dozen audio cassettes like this one to describe the different kinds of stock funds that are out there. The all-purpose funds, single industry funds, multi-industry, small company, large company, pure, hybrid, foreign, domestic, socially conscious, socially unconscious, growth, value, income, and growth and income funds. It's gotten so complicated, there are funds of funds that specialize in buying shares in other funds. You could stay up day and night studying how to choose the right fund, and you wouldn't get through half the information that's been printed on the subject. If all these how-to books, pamphlets, and articles fell on top of you, it would take a rescue squad several hours to pull you out. You can buy mutual funds directly from the companies that manage
5
them,
more minutes
such as
on the
Dreyfus,
live.
Fidelity, Scudder, etc. You can also buy them through a stockbroker, although a broker may not be able to sell you the fund that you want. Brokers have to make a living. They sometimes get a bigger commission for selling the firm's own products. Convincing you to buy one of their own in-house mutual funds may be in its interest, but not necessarily in yours. Whenever a broker recommends anything, always find out what's in it for the broker. Ask him or her to provide information on the full range of what's available. There might be a fund that's similar to the one he's recommending, but has a better record overall. If you're a long-term investor, ignore all the bond funds and hybrid funds. These invest in a mixture of stocks and bonds, and go instead for the pure stock funds. Stocks have outperformed bonds in 8 of the 9 decades in this century, and are way ahead in the first half of the decade of the 1990s. If you're not 100% invested in stocks, you're shortchanging yourself in the long run. Picking a fund ought to be easier than picking an auto mechanic. When an auto mechanic claims to be the best in the business, you have no way of telling if he is or he isn't. But you can find out right away which funds are the best. It all boils down to one number, the annual return. A fund that returned 18% a year to its investors in the last decade is better than a fund with similar objectives that returned only 14%. Before you invest in a fund on the strength of its record, make sure the manager who compiled the great record is still in charge. Why take a chance on a rookie fund when you can invest in a veteran fund that's been around through several seasons and has turned in an all-star performance? A list of funds that have stayed on top over many years can be found in financial magazines such as Barron's and Forbes. Twice a year, Barron's publishes a complete
Rose
roundup
Palmer
of
in the
funds.
building. Good night, Rose.
Details provided by Lipper Analytical, a high-quality research company run by a prominent fund watcher, Michael Lipper. The Wall Street Journal publishes a similar roundup 4 times a year. If you want more information about a particular fund, you can get it from Morningstar.
For lifestyle, check out Rose's channel.
Issues a monthly report. Morningstar ranks all the funds for safety, rates
Please
their
check out
performance,
Rose's channel.
tells who the manager is, and what stocks are in the portfolio.
Show her
Best
some love.
one-stop source in existence today. Over time, it's been more profitable to invest in small companies.
She talks about
than large
lifestyle,
companies. The successful small
gardening,
companies today
cooking,
will become the Walmarts,
fashion.
Home Depots, and Microsofts of tomorrow. It's no wonder then that mutual funds that invest in small companies have beaten out other funds by a substantial margin. A couple of stocks like Walmart is all a mutual fund needs to outperform the competition. That one stock is up more than 600-fold in 20 years. Since small company stocks are generally more volatile than large ones, you'll need a strong stomach that can take the bumps and stay on the ride. You'll do better in mutual funds that invest in small companies. And take note, it doesn't pay to be a fund jumper. Some investors make a hobby.
1 minute on the
switching
live.
from one
1
fund
minute.
to another, hopping the bandwagon.
Gotta get some
of the
rest.
latest hot performer. This is more trouble than it's worth. Studies have shown that top-ranked funds from one year rarely repeat their performance the next. Trying to catch the winner is a fool's errand, in which you're likely to end up with a loser. You're better off picking a fund with an excellent long-term record and sticking with it. Some investors have given up trying to find a fund that beats the averages. Instead, they choose a fund that is guaranteed to match the average, no matter what. This kind of fund is called an index fund. It doesn't need a manager.
Shout out to everyone who participated in the live. Shout out to Bobby Vincent, Island Gal, Fernie, Herb the Great. My name is Dan. Never be hairy. Cleggy, Rose.
You want your money, Arch? Subscribe to Dave Natch. Please, me I tell you no. Go on, go make the money now, please. Yeah, man. Wanna do it fast and quick here? Subscribe to Dave Natch. Fast, don't stop. Every day, you want the money go? Check DAVESPLAY. Invest. Interest. Bless.
Courtesy of Jingle King.
Stock market. Can't have fish up, so we get it every yard. Out the road, the grass green. Ice cream. Dave Natch. Clean. You and your team. They get rich. Everybody chill. See what I mean? To the world. Got a lot of money invested in a DAVESPLAY. Every day. You want your money at? Subscribe to Dave Natch. Food flow gas. Got a lot of money invested in a DAVESPLAY. Every day. You want your money at? Subscribe to Dave Natch. Food flow gas. Ton money, ton car meal. Ton steering. Ton wheel. Legal money and no drugs deal. KFC. Big deal. Sony. Green sleeve. Contract sign. Done deal. Money a pull like gasoline. For ocean. River stream. Attach a case 20 gram. Western Union, we don't money gram. Money too, enough to hold in our hand. Some card, the money where we have. After we no money fool, buy a condo with swimming pool. Around with everything cash rule. We learn this before high school. Got a lot of money invested in a DAVESPLAY. Every day, you want your money hatch, subscribe to the match. Food flow gas, got a lot of money invested in a DAVESPLAY. Every day, you want your money hatch, subscribe to the
No, never. You like that?
Food flow gas, rich.
That's DJ Concrete Face. I wonder why he called himself Concrete Face. All right, ladies and gentlemen, thank you for tuning in. Please like, please subscribe. Dave Natch, I'm out. Okay, Rose, I got you. I got you. I got you. Keep watching. Trust me, take a look at my videos in March. Big difference. I was very shy. Very shy. Okay, ladies and gentlemen, enjoy your weekend. I'll see you tomorrow. Boom, bam. Have a good night. We're coming in hot next week. We're coming in hot.